Okay, good day everyone. This is Mapletree Industrial Trust, 4th quarter and FY23-24 financial results dated 25th April 2024. Okay, we'll quickly look at the financial year on financial year results. Right, so for this financial year, net property income is up 0.6%. Distribution to unit holders is up 2.7%, but DPU is down 1%. Right, so year-on-year performance is not so good, as we'll see later. Right, there's positive rental revisions across all property segments. Right, however, the CEO mentions that moving forward, there will still be positive rental revisions. However, the rate or the percentage increase will be likely lower. Right, we'll look at this in more detail in the conference call. Right, so that leads to higher average rental rates for both Singapore and North American portfolio, which is more or less the majority of their portfolio. Okay, stable portfolio valuation. Right, they are still working on Osaka data center, and they have just divested this Tanglin Halt cluster, which we'll talk about later. Right, some of the proceeds from this will be distributed over the next 4 quarters. Alright, so it's not included in these slides. Okay, because they divested it too late. Right, this slide is as of 31st March 2024. Okay, so they issued some money, 50 million SGD at 3.75%. Right, I think this is quite a low interest rate in the current environment. Right, they hedged their borrowings higher at 84.6%. Okay, we're happy to see this. Right, and leverage is 38.7%. Right, we can see that DPU, we've discussed this before, the trend has been very good every financial year until FY21-22, which it peaked. Right, the FY23-24 and 22-23 and 23-24, it has been moving down. Right, so this is the peak of their DPU, right, or dividends. Right, so we look at the 4th quarter this year, financial year versus the last financial year. Right, in my opinion, in terms of DPU, it has performed well. Right, because you can see that DPU has gone up by 0.9%, and if you look at the last financial year's 4th quarter, this DPU, right, is less than these quarters, and plus it is propped up by a few one-off distributions. Right, so this divestment gain, as well as this tax and exempt income that was withheld. Right, so this amount of money actually was actually boosting this number, and yet this quarter the number is higher than the boosted DPU. Right, so I would say that this quarter the performance is good. Right, however, we compare year on year, right, the results are not so good, because you can see that both distributions are propped up by number 3 and number 4. Alright, however, this financial year I'm propped up by number 5 and number 6 also. Right, so that means there's more one-off money coming in to try and prop up this year's DPU, but this year's DPU is still less than last year by 1 year. Alright, so year on year I think the performance is not great. Okay, also if we look at portfolio revaluation, right, you can see that last financial year the portfolio revaluation was down by $110 million. This year is down by $210 million. Alright, so quite a lot worse than last year. Right, 90% worse than last year. Okay, so again, quarter on quarter, this compares to the most recent quarter, which is the last quarter. Right, the DPU is the same. Right, dividends distributed is the same, but again, last quarter was boosted by one-offs, so that's why I consider this quarter a good quarter for dividends. Right, we can see a sizable drop in NAV. Right, this primarily due to the revaluation we discussed earlier. Right, this year's revaluation is quite bad. Alright, yeah, portfolio valuation, I think I won't say too much. Alright, they said that actually Singapore, if we exclude the Tanglin Halt cluster that was divested, okay, the valuation of Singapore portfolio will have increased year on year by 0.2%. That means to say actually Singapore's property is valuation is doing well. It's the North American portfolio that is actually doing badly. Alright, and this is due to higher cap rates and discount rates. Alright, and we look at total debt is down. Right, we're happy to see that. Aggregate leverage, however, is up by a very slight amount, 0.1%. Okay, amount of debt they have to refinance this next financial year, actually is this financial year. Alright, it's quite low, 2.5%. Don't think they'll have a problem with this. Right, percentage of debt in fixed rates, right, is higher by approximately 5%. We're happy to see that. right? All-in cost of funding for the quarter is the same at 3.1%. I believe this is a low value, right? So we're happy to see that as well, right? We look at adjusted interest coverage ratio, right? It's 4.3 times. Okay, this one of the higher numbers amongst all the even better quality REITs. Alright, so we're happy to see that. We're also happy to see that it's higher than as of the last round, which is 31st December 2023. Okay, we'll quickly look at their top 10 tenants, right? So HP is a bit big, 6%, right? The rest, they don't really reveal the names, right? So I don't know who this is. Okay, AT&T is quite a big tenant, 3.1%. All right, and moving forward, right? So the Osaka data center, something to note is that they've only paid for 80% of it, right? So they have to still pay for 20% of this data center, right? And Tanglin hot cluster, all right, they sold it at 50.6 million. The valuation is 48.7 million. So they did sell above valuation, right? So this is something we have to applaud Mapletree Industrial Trust for. They tend to sell their buildings at pretty good prices, right? So yeah, outlook is challenging. This one we know, not going to spend too much time on it, right? So they say the outlook in America, right, is that overall vacancy rates for primary markets decreased further to 3.7%, right? So the vacancy in America is lower, okay, driven by continued strong demand from cloud providers and adoption of artificial intelligence. So there seems to be very strong demand, but I'm going to show you some numbers that is a bit worrying, right? This is the last year's financial annual report, right? So this is of 31st March 2023. They say their North American portfolio fell from 94.2% to 93.8%, right? So the drop is not super big, not super worrying, right? But remember, this number is of 31st March 2023, okay? Then we have a look at some of the updates in September 2023, right? So it's a couple of months later, and you can see the occupancy rate in America has dropped to 92.4%, which is still above 90%. But if we look at this, right, this one was March this year, 2024. It has dropped to 89.9%. So you can see the trend is dropping, even though they say that there's demand, right? So I'm not really sure what's going on, right? And this is the conference call, right? One of the analysts asked, they said US occupancy right now is 86.2%, which is quite worrying, right? And the analyst asked, do you think this is a bottoming, right? And I think this is the CEO, right? I cannot promise you this is the bottom, but we think it's near the bottom. Okay, apparently AT&T exited, okay, as I understand it, right? So if fully accounted for in this quarter is 86%. So he's, I think, confirming that the US occupancy is really 86%, which I'm worried, because if they say there's high demand and they're doing so badly, what's wrong with their properties? Is it because the kind of infrastructure is wrong, they have to do some AEI to go improve the properties, or so on and so forth? Or is the location not where they should be? Or is the big cloud providers like AWS actually building enough of their data centers that there's no more demand for this kind of data centers that are being rented out? Okay, I'm not sure about the answer to all this. Right, but the good news is that they say they are working on some new tenant that is very shy lah. So they again cannot reveal who this tenant is, right? They say that if they get this tenant, their occupancy should go back beyond 90%, or rather 91%, right? So this is a best case, right? Currently, their actual occupancy in the US is 86%, which, yeah, to me is something that I don't know why they didn't say too much about in the presentation. Okay, so with that, I don't want to say too much more. I'm going to just look at a little bit. Yeah, so I was talking about the rental revisions. So they say that they have reported positive rental revisions across all property segments. We talked about this earlier. Okay, the aggregate we are looking at is positive 6.6%. The rental revisions over the last 10 quarters have been quite high, right? So last 2.5 years, which is 10 quarters, right? The rental revisions is something like 7.2, 6.6, 8.8%, and it starts from 8.8% to 7.2 to 6.6. So you can see the trend is going down, right? So their rental revisions, even though it's going higher, which is a good thing, so they are still raising rents, but the rate at which they're raising rents is dropping lah. So they expect that it to trend towards 4 to 5%, right? Because they'll catch the whole bunch of them already lah after 3 years. That's what he's more or less saying. So you cannot expect that off a high base, right? The rents just keep going up by the same high amounts. Alright, so that's what he's saying. Right, so they talk about a bit about book value, divestment. So one of the things that is good about management, I think, is that they try and reach out to the market to get a sense for the broad range of assets in their portfolio. That means to say that they are always actively looking for buyers. And I think this is the reason why they always can divest things at a decently good rate. Right, because they're always looking around and asking people, do you want to buy, so on and so forth. Right, but I think they said that at this point the demand is not strong, and I think primarily is because of the high interest rates. Okay, people cannot afford to pay that much for a building. Right, high interest rates, generally the price of assets should drop lah. Okay, so because you have to pay more in interest rates, overall you cannot bid so high. Alright, so I think they are actually really banking on a rate cut for them to be able to stimulate more demand for people to buy their building. So moving forward, right, I think for MIT to significantly go up in price, right, the rate cut is really important to them. Okay, so if the rate cut happens, I think that they will benefit. Okay, so yeah, so this is the Tanglin flat sale, right? So they said that they have gains of around $13 million, alright, and it will be distributed equally over 4 quarters this financial year. So this should be some bump to DPU in this financial year. Alright, so yeah, I think that's mainly what I want to talk about. Alright, thank you for listening.